Fresh data from DeFi has thrown up a striking anomaly in the perpetual DEX rankings. GM Trade has surged to the #2 spot for 24-hour trading volume, recording approximately $4.7 billion. This figure displaces Aster, which now holds the third position with around $1.9 billion in daily trading. At first glance, this appears to be a major shift in a rapidly evolving market. Perpetual DEXs have become one of crypto's most competitive trading spaces, especially after the 2025 boom in on-chain futures. Yet the numbers tell a more complex story. GM Trade's reported $4.7 billion in 24-hour volume stands in stark contrast to its open interest, which is only around $44.4 million. Open interest is a widely accepted metric that reflects the total value of active positions currently held on a platform. It is often seen as a more reliable indicator of genuine user engagement than raw trading volume. The discrepancy between GM Trade's volume and open interest is significant. A platform with such a high turnover rate, implied by the $4.7 billion in volume versus just $44.4 million in open interest, would suggest an extraordinarily. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. High number of trades occurring within a short time frame. This could imply either a surge in high-frequency trading activity or potentially a reporting anomaly. Meanwhile, Aster's figures appear more balanced. It reported $2.1 billion in 24-hour trading volume with an open interest of approximately $1.9 billion. This closer alignment between volume and open interest suggests a more stable and engaged user base. The divergence in metrics raises questions about how volume is being calculated and reported across platforms. Traders and analysts are now scrutinizing the methodology behind these figures, especially as DEXs become more central to DeFi's trading infrastructure. The focus is shifting from volume alone to a broader set of metrics, including open interest, liquidation engines, and ecosystem depth. These indicators help paint a clearer picture of a platform's true market impact and user base. The current situation with GM Trade highlights the limitations of using volume as the sole performance indicator. While it may reflect a surge in activity, it does not necessarily reflect sustained or meaningful engagement. The next signal to watch is whether GM Trade's volume remains at this high level, or if it experiences a sharp decline. A drop in volume could indicate a temporary spike or a recalibration in how data is being reported. Conversely, if the volume stabilizes, it may signal a genuine shift in user behavior and platform adoption. The broader DeFi market will be watching closely for signs of whether this is a one-off anomaly or the start of a new trend in perpetual DEX trading. The stakes are high because these metrics influence investor sentiment, platform valuations, and user trust. If the volume is artificially inflated, it could. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Lead to a loss of credibility for GM Trade. On the other hand, if the volume is real, it could signal a new wave of adoption in perpetual trading on decentralized exchanges. Either way, the market is likely to react swiftly. Traders are already adjusting their strategies based on the latest data, and analysts are dissecting the numbers for any signs of manipulation or genuine growth. The next few days will be crucial in determining whether this is a one-time event or the beginning of a new chapter in the DeFi trading landscape.